Hey traders, how we doing? So on this recording, I want to go over this week in particular, why it was so difficult, why the charts didn't play ball. And so I've jotted down some examples, some areas that I want to go over so I can just explain why certain things didn't happen. Also at the same time, it will give you a good indication on sort of what we're looking for, what a good setup is for a good entry, and so on and so forth. So let's dive in. Let's go over the charts of this full week. Trying to keep it as short as possible because I don't want to go on too long. So like I said, I've previously marked up some areas from the beginning of the week on Monday, and we're just going to discuss the week and touching on each of these zones that I've marked out in lovely colours. So I'm sure you'll like that. And I just want to discuss this week and why it was so difficult, and hopefully give you some good golden nuggets along the way. So we're going to start with Monday here. Let's check that's right. Good. Yeah, that's good. So we're going to start with Monday. Now with me personally, I know a lot of other traders do this, but me personally, I definitely like to do this. I normally like letting the morning play out on a Monday. Just let the charts do what it's doing for the morning. Not rush into anything first, because there can be a lot of manipulation on the Monday morning, or it can be particularly boring. Like this one was quite boring, to be totally honest. So for me, I just let it play out. And like you can see about the manipulation as well. Look, when it got to quarter to 11 o'clock, just dumped out of nowhere. And that's what I mean with a Monday morning. I like to get it over and done with. So we're going to skip straight forward for what would be a typical entry in the market. So what I know Trader Free trades the same as me. I know many others trade the same how I do, and it's kind of it's like an A-star setup. It's kind of a good all-round entry, so that's why I wanted to go over this one. So we're always going to be on the 5 minute. When I show you most of these diagrams, most of them are going to be on the 5 minute, because ideally that's where you want to do your marking up. That's where you want to account for like a break of structure. You don't want to be doing stuff just on the 1 minute, the 15 seconds, because there's so much manipulation, so much movement, you can't take it for gospel. The 5 minutes is a good all-rounder. Obviously, like I've said before, the higher you go in the time frames, the more confirmed it will be. Like if you have a break of structure on a 4 hour, obviously that's going to be stronger than a 5 minute. So, but for entries, 5 minute in my eyes is absolutely perfect. So let's dive in. So our first entry, entry that never happened, is here. And this, before I go any further, this can go ahead for a lot of the times when you see in our community, it's like, right, we've got an area, or whatever the traders might say, eyeing up an area, this is what I think exactly what's happening, and then why the trade might come about, or it might foul, or whatever. So here is a great execution to what never happened. So you can see the charts come down with speed and momentum. Not too sure what it grabbed to the left there. That's probably what it wanted to do. Nick the liquidity from there. I actually quite like that green colour. I might leave it like that. I'm going to do my markups. So it's taken liquidity there with speed and momentum, and it's reacted. If you've watched any previous recordings of mine, you can see it's not made a new high here. So it's come out of this zone here. It's come into this 5 minute POI. Let's go a little bit shorter there. Let's change that colour. Let's put it there. So it's come in to that 5 minute POI there. Now this is where you'd start going. You can see it going down, and you start thinking, right, there's an area of interest here. There could possibly be a trade coming. The next thing you'd look for, let's zoom in a little bit more, is you'd want a little bit of evidence. You don't want to predict, you want to react. So for an ideal setup, this isn't for every single signal, this isn't for every single trade, but in an ideal world, for a nice setup, nice confirmed trade, one of them trades you would take, and if it lost, there's just no problem, because you just think, okay, cool, these things happen, these losses will happen. It's just one of them trades. So this is the sort of the examples I'm going over. So when it come down here, we want it to come down on the 5 minute, make a break of structure there, which will be classed as a relevant break of structure, RBOS, a relevant break of structure. Then what you want it to do is come back up, like we've discussed in previous calls, back up, filling in these imbalances, up into the POI area, the 5 minute POI, and then reacting off of it. But as you can see, it's come down. There might be a message that goes out, looking, got a good area, get ready. Then it just keeps going. Just keeps going. And it's just, there's nothing you can do about that. Once it keeps going down, gone. Momentum's gone, trade's gone. And this happened quite a lot this week. And what also happened was as well, a lot of times, or what can happen, is it can come to the area that you want and you're thinking, right, it's come here, and gold has just been blasting through the area. So although that there's A-star setups, gold is just not been playing ball at the moment. It's really not. Like our traders, or let's get rid of that, or even me, I had one on Thursday. I might have marked on it, I'm not sure. I had a good setup and it just went straight through it. And you know what, I weren't cheesed off because I followed my rules. I was disciplined, I waited for my area, and gold just decided to rocket straight through. And it's just one of them things. But sometimes this is why there's no entries at all, because you have your area just like this and it doesn't come back to it. And then as you can see, as the day goes on, you've missed that trade, so then all day is coming down. Look, there's just nothing nice. It gets to around these times like 5 o'clock, and it just consolidates because there's no one in the banks, there's no one in the markets, because everyone's at home now. London's over, New York's over. There's no liquid. Nothing's there. The momentum is gone. So then we're waiting for the next day. So then we go on to the next day. I'm not going to do no examples that were in the middle of Asia and stuff like that. Although there is examples, I've not done it because none of us really trade it. I know I don't trade it, so even if I'm doing some form of back testing or whatnot, I don't look at the beginning of Asia because I don't trade then. So why am I going to collect data for myself when I don't use them hours? So anyway, we'll just go to the next examples. Here's another great one. You can see it was bullish from the middle of Asia here, from 5:45 in the morning. You can see we've had our first fake break of structure there, which come down, bit of manipulation, and then it's gone bullish all the way. Now it's come down here. What it's done, it's gone into this area here, another 5 minute POI there, which would be a good area because we've created liquidity here, we've created liquidity here. So let's put, so there would be liquidity there. There would be liquidity under here. The reason why this is a good area for it to come down to is because it's broken up. People have entered. People will also be entering here as well. You can see that reaction. So you've got more entries off of these people entering early. So there would be more stop losses there than the markets, as they do. They like to manipulate it to get people in the market and then take them out. So they take them out, build up their capital, and then they go on their way with their own trade. Like here, these ones that are marked down here, how do we know when it's once they've gone in, they've not brought their trade up to break even? They've moved all their stop losses up. So that's why it's probably come down here and gone no further. But again, look, on the 5 minute, it's come down lovely, it's taken liquidity, and here, this would be a perfect area, especially for me. I'd be sitting there thinking, right, this comes into here, I'm taking a trade, no questions asked. But it doesn't. It just comes down, creates a perfect area, a lovely imbalance, and just continues on its way. And it's just, this is why gold has been difficult this week, because gold normally plays ball. The charts normally plays ball, and they normally do a lot of the same thing. I mean, you can never bank on it at all. You can't do that with the charts. But this is why we all get a good edge, whether it's how we trade, whether it's our other traders, how you collect your data, collect your edge, and you'll know 70, 75, 80, 85% of the time, mathematically, it's going to work, because we've done our due diligence, we've done our back testing, we've done our hours and hours and hours on the charts. Normally they work. But gold's been a pain this week. it's just been creating lovely areas and then just going on its way, and you miss the trade. You miss the trade. It's so frustrating. Same thing, same day. It's come down, it's made a relevant break of structure, come down, and if it wanted to come down to take more of this liquidity here that's built up, it just didn't come back into that area. So it's just gone down, gone all the way back down. I know here it's gone up, but here, that's what time is it here? 11:45. So you're never really gonna take a trade around these times. Well, you're not. You don't take trades at them sort of times. So when you've got times, even the first hour into Asia, really, you don't really want to be trading around that times. Bigger spreads, unpredictable. I mean, look how much that just rockets up straight away. We just don't do it. So that leads us on to now, is it Wednesday, I believe, which is another trade here. This come down, it breaks high, shoots back low on the 5 minute, and now it does come back up and create an entry here, but it comes down so fast and takes so much liquidity, it changes things. It changes how you're looking at the chart. So even you can even see here that it has come back up. There's two things here. You could have a trade going here, and a lot of people might put their stop loss above this POI, and then it comes down. If you had that over a little bit, it would come in, wick you out, or you could cover the high. But it comes down to so much speed. It doesn't just make one RBOS there. It comes down, takes this one, even takes down to there, reacts off the Asia high. So you don't know that could just keep going up. So again, it's just like reacting a little bit different to how it normally does. Excuse me. Now, we know it isn't always going to be like this. This is just how the charts go, and especially with the economy, with the wars, with the elections going on, like just with everything going on in the world today. It's just making it a little bit difficult this week, but it won't stay like that. So that is the beauty of it. I know a lot of people say, well, like, should we adapt? Should we change our edge? Should we be doing anything different? No. If you've got a good edge and it's proven and it's working, just keep it. Just keep doing what you're doing, and the mathematical data alone, you'll stay on top. And that's why we have risk management, because you are going to have times when the markets go like this and you might take a few L's, you might hit a few stop losses, but by not over leveraging, by not overdoing it, you're keeping your balance at a good steady place. So if you have 3 losses, you have 1 win, you can get that all back. So it's that is why account management is absolute key. I mean, here was another little example. So as you can see, it's come back down into an area here. It's made a couple of little highs on the 5 minute, speed momentum up, and now that has half made a little entry. But look how far away it is from the POI there. So even there, it's kind of made an entry, and then look at it afterwards. It's absolutely rocketed up, and then it's just ranged for ages, for hours and hours and hours. It's just ranged and done nothing. It's just not been nice. Again here, it come down, broke the 5 minute RBOS, didn't return, then just dumped all the way back down, And on here, there was lovely liquidity up here, like so, and it just never come back. It just kept going. And I think this is Friday here. Look, again, this was a lovely one. It come up, took a lot of liquidity here on the 5 minute. It broke down here. You could even say that one up there, but either way, it's still never come back. So that's just the way gold and a lot of Forex has been at the moment. So I don't know if you've gathered by now, but this is the type of entry we like. So let's just give you a quick diagram, because I know a lot of people do like entry. So a safe A-star setup would be this. So if you've got the markets creating a trend, but the overall bearish is down, we're gonna wait for it to take liquidity, normally with more speed and momentum. We're gonna break that there. We're gonna come up into our area, and then we're gonna go back down. So that's the entry that we like. We like an imbalance. We like an RBOS there, like that. I have all mine marked out, so when I'm marking it up, I know what it's like. We want this to have obviously taken liquidity to the left. We want it to show a change of character there, an RBOS, ideally an RBOS, which is basically to the left. It just shows it's a bit more confirmed on the, or a lot more confirmed on the 5 minute if it takes that. Back up. In an ideal world, we want it to create an imbalance there on the 5 minute, like that, and then we take the entry, stop loss above the top, target wherever we want to target, 1 to 2, 1 to 3, whatever it may be. What I would say in that case is just don't be greedy. Just don't be greedy. 1 to 2 is good. 1 to 3 is very good. So we'll take that, and that's our entry. That's our A-star setup. What we're looking for. Obviously, there's many variations how this can work, but that there is what we're looking for. So yeah, I hope that helps as to why the markets have been a little bit tough this week. Entries are just not being as on point as they normally are. Rather, gold's just shooting through areas, or it's not creating the setups we want. And this is why sometimes it might go a few hours or whatever. It might go all day, and there's no trades. If there's no trades, there's no trades. We just sit on our hands. We can't just guess that it's gonna go to these areas, or we can't just think, right, it's gonna dump from here. That is not how trading works, because we don't just take trades from the top and trades from the bottom, because who are we to say it's going to change here? We wait for a reaction. We do not predict, we do react. I know I say that a lot, but it's so true. So many people just want to catch the top and catch the bottoms. It's get that out your head. Oh no, I lost a lot by trying to do that, thinking, right, the market's overstretched, it's got to return here, it's got to return. It hasn't got to do anything. It hasn't got to do anything. But anyway, I won't keep going on. I hope that makes sense. If you enjoyed it, give it a thumbs up, maybe a comment, whatever. And yeah, happy trading. Let's see on to bigger and better trades next week, and we'll take it from there. Cool. Have a great one. Speak to you soon.